Good morning and welcome to Trading with Larry on a Thursday of our first week of existence of this new podcast that I'm very excited about, and I'm going to smile a little. My production team wants a lot of smiles. I said there's no smiles in trading, okay? But and certainly as Tommy touchdown Thomas Maples behind us will attest to, there's not a lot of celebrating done in the office during the trading day. But I'm trying to make everybody happy on our first week. So I'll be smiling and happy and chatting with you about the trading markets for the week and what we're looking for, especially to get everyone ready for today. So today is Thursday. I want to just make everyone aware that we do this show every Monday through Thursday. And then on Friday, I basically put out to my subscribers an Ask Me Anything show that which also will give you a weekly recap, but you can send questions into info at the Opportunistic Trader, and I try to answer as many of these on a weekly basis as I can. We get a lot, so if we don't get to your question this week, we'll definitely hit it as soon as we can. So don't think that you're going to be left out. So hopefully we'll get to answer all the questions. And yesterday was kind of a quiet day. I'm going to give you, the Iron Condor worked out yesterday for you, I'm assuming. And for us, we again do it a little different, I think, than you. We enter the position in the direction that we think the market is going in, the opposite. So if we're bearish, we would enter by doing a call spread and we wouldn't touch the put spread. And then when the market goes down and we think it's gone down enough, we may sell the put spread. Or if the market is going higher against us to protect and bring in more premium, we may sell the put at that point. So the $30 straddle paid off yesterday. Very quiet day. Really, I had a lot of work to do yesterday. A lot of times during my trading day, and I think it's important for people out there as well. It's good to get up, stretch your legs, definitely set alerts on your phone in the stocks that you have, through your trading apps so that you don't get blindsided by news when you're not in front of the computer. I have Thomas behind me. We usually have it covered all day. He likes to go to Publix 3, 4 times a day. He's bulking up for the football season this year. So he's, he gets out a little bit, and I try to, get out of the office for a little bit. I think it's important for all traders to have a clear head. And when you're watching every tick, it kind of screws you up. You know that. There are other things that I don't watch CNBC. I watch Bloomberg. I know a lot of traders watch CNBC. I always felt like when I had it on in the background, it was subliminally telling me things that I didn't want to hear, and they were usually always against my opinion. So we tune into Bloomberg. Again, you get market opinion there, but it's I think a more news relatable channel. So, if you have Bloomberg on your TV, we like that as our source. And then also you got to remember this: trading is in real time. Um, the TV is in a delay. It's a slight delay. Thomas says it's 5 seconds or 10 seconds, but it feels like an eternity, especially, on a Fed meeting day at 2 o'clock when, you see the market moving and it hasn't hit the screen. So always pay attention to your real time screen when you're trading. So, that's sort of our trading setup, how we like to do it during the day. Again, I think it's important to clear your head and not watch every tick. But interestingly enough, I had a lot of other things other than trading to do yesterday. So during the day, I sat here and I was watching the market, and really. only volume that we saw was on a couple of the down spikes. I think one of them happened at like 130 or 2. We had a volume acceleration in the S&P, but still came in with very, very light volume. But the volume that we saw yesterday was on the downside. And then one other thing that I thought was interesting, and then I'll throw it to you, and you can, start us off, give us your thoughts and all of that. One of the things that I thought was extremely interesting was now I forgot what I was going to say. Dude, that's
You
why I
were
bought two.
talking about down volume. I was getting into it. I'm like, what's next? And now you
Oh
forgot.
no, anyway. I forgot my thought, but overall, the volumes have been very, very light, and it's this is what I was going to say. I'm sorry. I remembered it. I guess over 60 you lose your memory. But what it was is we cue in on something at the end of the day, which is market imbalances, which used to really work well. So the exchange starts posting market imbalances at 2 o'clock and they go up to 350. A lot of times it's a fake out, like it'll show stock for sale and stock to buy. But what I was thought was interesting was the last 2 days we've had fairly big buy imbalances on the close, and the market really hasn't gone anywhere. So I think, like you were touching on a little, maybe it's this volume factor in the Mag 7 or the largest cap stocks that are picking this up.
The
But
liquidity, yeah, the liquidity factor, which has
so
been
we're
out.
seeing, I'm seeing market on close imbalances that are to the buy side multiple days in a row on a decent level after showing to the sell side. So that means late buyers are coming in, but we're trading a bit lower from there. And today should be interesting. We're going to see markets down very slightly. I mean, when I say very slightly, what, 30, 40 basis points, not even anymore. And this is the best they can do after legitimately 3 weeks of straight up. So we'll see if there'll be some selling today. Buyers obviously live higher and sellers live lower. So we're going to have to come in a bit here for them to feel satisfied that the market, is set to go lower. I'll throw it to you. You can go over what you're looking at today and your thoughts, and then I'll come over the top.
Sure. So just wanted to add, you said that the market, all it's got is maybe a few basis points of a move here. And that's coming off of retail sales that beat. Producer price index came in less than expected. And I think jobless claims were in line, right? So everybody's concerned about the effect of tariffs. This is all for April. The data just came in positive, and it just feels like the market may have lost a little bit of juice here. But something I was looking at yesterday was Boeing. They had that headline, biggest uh, Boeing order in history coming out of the Middle East. And, you know, I put on that alert just like he told everyone to do right after that news. I just wanted to see if it would retrace all the way back. And those are the kinds of anecdotal things that I watch to see maybe if things are getting a little bit too stretched in either direction. And lo and behold, Boeing came right back to unchanged after really good news. So I
But
think
is
you and
it?
I know.
But let me ask you: is it really good news? Like, I don't know. I think that what did they say? They're going to order 20 planes or something. I mean, it didn't seem like anything crazy.
Well,
But
it's the biggest order ever, apparently.
listen, there's a lot to talk about. Now you got me fired up. Okay. I mean, come on. This is what we talked about. All right. This is all what I know you hate when I say it, but it's fake news. Okay. They're appeasing Donald Trump, who's sitting in their country. Okay. To telling them what they're going to do and how many planes they're going to buy and the orders. You don't know what they're actually going to do. You have no idea what they're going to do. Okay, they promised to do that, and they're hoping to do that, but that doesn't mean they did it. Okay, and I think between him getting a free plane, how could that? Let me ask you, how could that be legal? Like, come on. And at the same time, his son signed a crypto deal in the Middle East. I mean, something just
Did
the
you
stuff
read
he's
today?
getting away with.
Citadel and Hudson River are going to be upping their operations in Saudi Arabia. There's a lot of stuff that they must have talked about in those meetings.
What do you mean upping their operation? They're sending traders.
Citadel, it's all over Bloomberg. Citadel and Hudson River are going to be doing a lot of trading in Saudi Arabia
um, I understand, but you don't have to be in Saudi Arabia to do any trading in Saudi Arabia. You could trade Europe right now and not be in Europe. So I'm not. I get it. They want to have boots on the ground or whatever, but I don't know. I don't. It'd be interesting to see what the market cap of their market is. It's probably all Saudi one stock, Saudi Aramco or whatever. But that's a one trick pony over there. What's interesting? In Saudi Arabia, you know who the largest owner of real estate in Saudi Arabia and the Middle East is, pretty much? You know what family?
now. The Saud family.
No, Bin Laden. Bin Laden's family owns all of Saudi Arabia. Multi-billionaires, multi-billion dollar family. They're the largest in Saudi Arabia. Definitely worth investing in that guy. After what they did. But literally, if you go over all over Saudi Arabia, everything's Bin Laden. So
It's pretty unbelievable.
yeah. So anyway, now they're our best friends, and who knows what's going to happen. But listen, I feel like all of this is done for one particular reason. It's self. Basically enriching self wealth, and his buddies, his friends are just people that do things for him. And it's, I don't know how all of this stuff is legitimately legal. So that being
Well,
said,
Trump loves to do bilateral deals. He doesn't like multilateral deals. And look, I mean, Boeing's got a big order. If you look at who was there, you had Elon Musk there. You had the CEO of Palantir there. By the way, Palantir just continues its momentum. So there was a lot of business people there as well.
yeah. Listen, Palantir is unbelievable at $250 billion. It's one of the largest companies in the world. It started out as $1 billion. So it's actually a crazy story. They're really run by the government. I don't know how. It's funny. It's okay for Palantir to now put all of their stuff in the Middle East. I mean, they're, AI supposedly technology for the government, and they were so worried about government contracts. Now it's okay. I mean, listen, this will be looked at in history of time of what's going on. But let's switch to another gear. Where are all the trade deals? What's going on, with tariffs? Dude, I haven't heard anything in a week. The China deal came back on Saturday or Sunday. Okay. What's the deal? Where is it? This is week one. We are now in week one of nothing happening. So we're in week one of nothing happening. Okay. What's next? Explain it to me. What's coming next? They're gonna meet. Wait, they're gonna meet again in 3 weeks, 4 weeks. Okay, and then they're gonna meet, and what's gonna happen? I'm just amazed that the market has given this such a pass right here. It doesn't even make sense to me. Like, where are all the trade deals? Where's the deal with India? Where's the deal with the EU? We know that's not going well, but where are all the deals, dude? Tariffs are in. They're in a big way. Okay, minimally at 10%, up to who knows what China's tariffed at. I mean, what they reduce them to 50%, 60%. I don't know. So what I'm asking you is, how come that's so off the table and that's not in the mantra of anything going on? That's the one thing I don't understand. I mean, and tariffs are in, and the numbers you're seeing now are going to fall off the cliff next month. Okay, 100%. retail sales has to go down because everything's slowed down. There's no products. No products are coming in the country. So don't you think these numbers have to slow? This was the preemptive. Yeah, retail sales beat the number, but they never raised the number in the fact that everybody had to get everything done before tariffs hit. Before,
A lot of retailers also are um, absorbing the whatever price increases are there for the time being. Again, that's for the time being.
I don't know if that's fully the case. I really don't. I know I'm reading stories that, there's the tariff tax on goods. He yelled at Amazon for putting that on their products. So they're passing it along. Okay. The tariffs are not as big. There
I
are
mean,
some.
Walmart even had this. I'm getting this straight from Walmart in their earnings report today.
Okay. Well, I
They're
all
absorbing
I
the cost, but they're
okay,
saying
so
we
then
don't know how
but
long.
that's not good. That's not good for the companies then. They're not making as much money. If they're
Right.
absorbing a tariff, then they're not making as much money. And eventually, if they want to make money, they're going to have to change what they're doing. And there are companies that are passing it along. And there are situations, Range Rover and Jaguar. I don't know, Land Rover and Jaguar. I don't know if they're coming back in the country with vehicles, but they didn't for the last 2 months. So, that tariff went down, I think it's still 25% on autos, even in the UK. It may be down to 10. I don't know if, Thomas, you can check that what the UK auto tariff is. I don't know if it's 25 or 10, but they don't want to ship cars. Mercedes Benz, like you said, is absorbing the cost for now, but they're not going to absorb that cost forever. They're going to slowly increase prices and get it up to where they could make money. They're in the business of making money. So
I think the big point and the point that you've been making for a while is that Trump wants the tariffs. It's not like they're going to go away, but the market is certainly pricing in as if they are. And you mentioned India earlier. I don't know if you saw that Bloomberg article. It was on CNBC as well. Trump asks Apple to stop moving iPhone production to India. So
obviously, because he wants them to make iPhones in Indiana.
he's,
Okay, that's going to happen really fast.
you know what? That was a good one. I
They're going
like
to
that.
set factories up in like a week. They're going to be like, what are those things that they call them pop-up stores? There's going to be pop-up Apple, facilitation plants where they're going to have like,
Funny.
maybe AI can make the phones. Listen,
He wants to make them in
it
Indiana, not
is,
India.
it is,
Good
it is.
job.
I'm just telling you, it's we are priced for perfection right here in every way. I'm just surprised Trump has been so quiet. Like, as far as, like, I guess because he's getting free planes and he's in the Middle East and he's making
Exactly.
deals all over the place that are really not deals. I mean, I don't, I don't, I don't understand what fascination. I mean, I do because he's rich. Like, what? Why would he want to even talk to this MBS over
He doesn't
a
because
story?
he doesn't look at it the way I think globalist people kind of look at it. He looks at it like I'm going to do a transaction with you. You're going to do a transaction with me. If it's good for you and it's good for me, we're going to get it done. And whatever it is, it is.
But how is that changing anything? I don't understand. So he got an extra transaction. He got them to buy 20 planes or whatever. I mean, yeah, it's better than getting nothing, but it's not real, is what I'm saying. Listen, I don't know how long it takes them to make 20 planes. Okay, but it'll take years, I would assume. Okay, I think it takes a really long time to build a jumbo jet. Okay, so he's going to be gone. Dude, this guy is going to be gone. That's what no one realizes. Before you blink your eyes, we're going to be through year
But
one.
everyone said before the election, nobody's going to elect Trump a second time. Everybody said that in when he got elected the first time, and then the second time, everyone was surprised the first time. He he
No,
ran on tariffs.
I actually, what I
The
voted for
majority of
him.
the population elected him, And so I
I
think
voted. Listen, I voted for him the first time. I didn't the second time, okay? But I thought he could win the first time because the same thing happened the first time that happened on his third time, okay? And that was that the Democratic Party let made a lot of mistakes and let him sort of walk in. You know, the first time it was against Hillary. Hillary went into full defensive mode at the end of the presidency and was hiding for 5, 6 months. And if you remember, Trump was campaigning in 5 cities a day. It was insane how much energy he had, and people were up for the change. In the second election, where he won but actually lost, or lost and actually lost, either one, I'm not sure which, but he lost to Biden, which was pretty unbelievable. He still can't get over it. He talks about Biden almost every day, and the literally he still can't believe he lost to that guy. Okay, he's like, how did I lose to that guy? Anyway, so and then we had the
the
third.
moment I knew Trump was going to win in the first in 2016, this was right after the locker room talk incident, right? And he was like crashing in the polls. The media was all over him. There was like a month left to the election. He brings out all the women that had problems with Bill Clinton, and he sat them all like at the press conference, and he was right in the middle. It felt like it felt
You
like
think
the last supper.
that's a good move. That's a really good move. There. That no, the country likes that.
And, and then during the
Listen,
debate with
listen, you're
Hillary,
getting
he
way
sat
too
them
deep.
all in the front row.
This is a PG show, okay? This is we got to keep our audience. You're getting
Well,
way turned
well,
sideways. I
I'm
don't want
just
to. I
I'm
don't.
not
I
saying
don't want
anything
to know about Bill Clinton's
happened.
women or his women. I don't care. We're talking about the market.
Okay,
So,
and at
hey,
that moment, I knew that this
you're
guy's going to win the
literally making me laugh. Okay, you're out of control right now. You've hit levels. So you voted for him because he brought Bill Clinton's women out.
I'm
You
not telling
love
you who I voted
that.
for Ross Perot, bro. I voted for Ross Perot.
So anyway, I was getting to the third election before you went on a side tangent about Bill Clinton's girlfriends, but I'm back now. So on the third run, basically what happened was the Democratic Party thought that they made a lot of mistakes. They thought that the country was happy with Biden and the lack of what he was doing, and that the market was up and everything was stable, blah blah blah. They misjudged it. Obviously, he had major issues. They couldn't sneak him past. People should have known this. They couldn't sneak him past the debate. They got deep down, and basically they didn't even do any type of election to elect the next person that would run because they didn't have the time, and they ran Kamala, who was a calm. I think I'm going to go out on the limb on this podcast right now. I think I could have beat Kamala. Okay. So I think I could have been the president if I was running against her. A disaster of disasters. But anyway,
Thomas
so that puts
for
us,
Larry.
that puts us here. We've been talking a little bit about Clinton's girlfriends and other things, around the market. I think really the takeaway that I want to leave with this segment and then get really more into the market is I want to leave with the fact that right now our belief, and I think you're in this camp, that the numbers will get much softer. Um, Especially starting next month. A lot of these numbers are front end loaded because people wanted to get inventory in the door and sold at the relatively lower prices. Even though you're saying they're not passing it on, they got to be, at some point. They can't, they just can't take that loss. And to be honest, the numbers have come in like you're looking at retail sales came in a bit better. Inflation is not showing up in the market the way it was. But we believe, or I believe, and I think you're in this camp, that inflation is going to tick up. You're going to see slower growth. Now, it won't be to recession levels because right now, but it may be. How about this one? Maybe were in a recession or are in a recession right now. Because, like, we won't, I know recession is what, 2 quarters of negative growth. I don't think you're going to see that, but I think we had like what you would think in a human being is a heart attack. So the market had like a heart attack. Okay. I mean, let's back up. Okay. The market in the last 4 weeks, now it's probably 5 weeks since Liberation Day. Okay. The NASDAQ went down over 30%, which is a massive crash. Like if we ended the year there, it would have been up there in the top five crashes, or market down moves of all time, literal all time. Okay. That was from April 5th until April 20th. Okay. That's how fast that happened. Then from April 20th to May 12th, the market had a reverse crash. And the S&P is up 26% and the Nasdaq is up over 30. So this is what's happened in the last month and a half. And I have never, I mean, I think a lot of this is algo trading and, all of that. But I think overall, we don't see moves like this. And what's happening is, I'm going to go back to my saying, and it really holds true, is buyers live higher and sellers live lower. So like, and those people are not retail. Retail doesn't make a move. This is all like hedge funds, institutions. So I think everyone made a move out of the market. Listen, I remember, I think it was Sunday on the second week after the Liberation Day. Kramer was on Friday night saying the market was going to crash like 1987, which obviously was wrong and was the dead low. But I mean, that's what people were putting out there. And then all of a sudden, we're here now where we've had, I think Thomas told me yesterday, it's like 17 out of 19 updates. It's an incredible move. So right now, I think I'm going out with this that we're priced at perfection, and I do expect the market to pull back in here from the 59.20 area. I'm hoping it pulls back into the 56, 57. I don't know if we're going to see that, but you're one or two negative headlines away from that happening. And that, I'd like to see some movement out of China. But we're deep here in the podcast, so I want to just touch on markets in general. One thing that we are been all over, and it really hasn't had an effect on the market, um, is that bond yields closed above 450. So that's something to look at. And I think the next move is to 475, even though the market is kind of around 450. And I'm seeing here it says Fed Pal cautions about higher long-term rates as supply shocks provide policy challenges. To me, our U.S. stock market is shrugging that off. This is the chairman of the Fed basically telling you rates are going higher and they're going to have supply shocks. It's kind of, you know what? I feel like I want to do a little victory dance because literally we talked about this yesterday that these container ships have nothing in them. Nothing. There's no supply of goods. You're going to see it's not going to be as bad as COVID, but you're going to see an event that's going to basically be a massive supply shock. There is no supply coming in here. There are no cars coming in, not as many. What? Let me ask you this. Why would Mercedes-Benz want to ship cars here? Okay, when they can sell cars in Russia, the EU, China, Japan. When I was in Japan, there were a zillion Mercedes. Why do they want to sell cars here for a loss or basically break even? So you're going to start seeing supply wane. I think this headline is really interesting and agrees. Maybe I should run for the Fed. Agrees with what's going on out there. Literally, Eric. I mean, he just came out with this statement, and he's literally. Maybe I'm misreading it, but it's saying that rates are going to go higher, and we're going to have supply shocks. I mean, that's something good? Supply shocks? and it's providing him current policy challenges, is what he's saying. So the market is in bull rip mode. If this came out 2 weeks ago, we'd be crashing, literally crashing. So,
Yeah,
you know,
the wall of worry is very steep. It's a big wall of worry that the
I don't think
market.
anybody's. How could you be worried? Let me ask you this. You talk about Palantir. Palantir went from 125 to 68. Okay. Now it's back on the highs. What could you be worried about? What are you worried about? You already saw it go to 68. You're never selling that. You that thing could go back to 68 and you won't make a sale. So it's just more Pavlov's dog, getting these guys trained, to never sell, which causes a problem. But I think that's a big headline. I think that it agrees with what we're thinking here, on this podcast. And I feel like it's real. It's real. Like you showed the shipping, prices. I'm telling you, the shipping containers, the ships are coming over empty, literally empty. Very little supply coming into the United States. And that's what no one's pricing in. Let me ask you a question. If you can't get toilet paper, I remember during COVID, the toilet paper was like the hottest commodity going. I don't know why, but it was. So I
It's funny
think
since you mentioned that used to be the hottest commodity in the ex-Soviet Union for a long, long time.
yeah, but the reason why is everybody hoarded the supply. I don't know why. But anyway, I want to touch on markets because I think we've had a good conversation. I think people hopefully could take away a lot of what we're talking about and
Well, people are
putting
going to think.
is
People
together.
are going to think we need to short massively. That's what people are going to think based on our conversation.
No, I don't think that. I think, it's funny. I think that really what our show does is get people ready day over day. So our opinion, you know, I've sort of had the same opinion for the last 3 days. That the market has limited upside and you can sell upside call spreads. I'm going to wait for any type of rally to do that. We may sell an upside call spread, but pretty far out of the money, not being as aggressive today. But I think that the market could get interesting today. And
Well, I'm curious now. You've been looking for downside. The market is going to open up slightly down after good news. Why are you selling so
why
far
is
out of the
it?
money?
Can I ask you a question? What is the good news? These numbers don't mean anything. They're numbers pre the tariffs, basically.
Okay, so let's say it's not right. Why
It's
are you a
whatever.
little
It's whatever.
money?
I'm not. Listen, I'm looking to sell above the market. I'm not in the market. And as long as the market doesn't have over a percent move today, I should be fine. So I'm basically putting that position on, thinking that the market isn't going to move a percent higher from here. I wouldn't put them on directly on the opening because I'm going to wait, because I figure they're going to try to rally because they do that every day. When that fails today, which I think it will, we want to do that trade. Stuff also that's very, very interesting. I want to cover every market here. We covered, the bond market. Obviously, that has a major issue. What I think is interesting, is markets, debt markets around the world are struggling the same way our debt market is struggling, meaning prices are going to go lower or have gone lower and yields have gone higher. But the one that's the most interesting one of them all is the JGB, which is the Japanese 10-year government bond. And that thing is at almost a 150 yield. And for people that follow that, that's been negative pretty much my whole career. And so this is one of the few times, maybe two or three times since the 80s, that this thing has been positive. So, for the Japanese people, they have alternative now. They used to have to pay the Bank of Japan to hold their money. That's how crazy that market got.
Here's that chart. Is this what you're talking about?
Yeah, but
JBM.
Yeah, but is it you got to go back and back, so you're only going back a way. Go back 5 years, 10 years, you'll see it. But anyway, I don't want to spend too much time on the JGB. It's something that I've traded in the past, but probably no one on this podcast really will have interest. But it's something that you should look at just in general in history to see what has
Well,
gone on here.
everybody had interest in it last summer when the Japanese carry trade broke and people were crying. This is 1987, which you, by the way, traded 1987.
I did. I did. I was on the floor during the crash of 1987. I was I was only 11. No, I'm only kidding. I was 22 years old. And actually, I was 25 years old when the crash happened. I probably had 3 full years of experience. I literally was mesmerized. It was probably something that was the most important day of my career as far as understanding risk management. But it was crazy, and I was so young, and I saw things that you'll probably never see in option markets and in the stock market. Pretty much ever, because no one ever saw that before in their living lifetime. So option prices went to like a 500 vol, 1,000 vol. Like they were buying put options like the index was going at zero. So there was unbelievable opportunity, but no one really knew because it was the first time, that had happened. Now we've had, multiple scenarios, nothing like the 87 crash, which happened in one day. Um, these other crashes, whether it's '08 or 2022, took periods of time. What made that amazing was that it happened in just one day, and we had a 20+% move in one day, which is unbelievable. Now our markets freak out on a one, or what do you call it? Like a one standard deviation move is like
One
signal,
signal move,
so
signal move.
that day taught me a lot about risk management and what potentially could happen. And no one knows what could happen, but that day taught you things that could happen that you never thought would happen. So, it was a great experience. Being there and learning from that event. But let's look at so we touched on the bond market a little bit. We touched on the foreign bond markets, which are backing up as well. And our call is 475 on the yield, maybe even up to 5 on this move. I think there may be some dislocation because of what Pal is talking about, and it makes me a little bit nervous. Like, why is he talking like this? You're saying they don't really see a lot or know a lot, but he's pretty vocal on this. What he's coming out with that statement. He must be seeing what we're seeing. Total slowdown in supply, which causes demand disruption and price increases. So that's the most inflationary thing we can have. Let's touch on
Have a great track when it
what
comes to predicting inflation, though.
what happened.
He doesn't have a great track record when it comes to predicting inflation, though. So I don't know how much stock to put
Let me
into
ask a question. Do you? Who could have a good track record? It's very, very difficult to predict.
everybody in this
Okay,
country knew that we
we're
were
gonna
getting
put
into
you in.
inflation.
We're gonna put you to run the Fed. You're gonna run the Fed. Yeah, dude. Yeah, I mean, come on. You're gonna be making right calls all the time. You can't make right calls. The guy.
Everybody in the country knew that we were in inflation just by going to the grocery store all throughout 2021,
I understand,
except
but
Jay Powell.
he's running the Federal Reserve. He has to err on the side of caution, and obviously he's going to miss every move because they're much more cautious. Okay, he said inflation was transitory. He made a mistake. He waited too long. Guess what?
I just think this whole tariff thing is
Yeah,
gonna
but guess what, Eric?
be
He waited
different
too
than
long.
what conventional thinking
He
thinks
waited
it's
too
gonna do.
long, but in 2024, the market made an all-time high. So whatever mistake you think he made, it wasn't really a mistake, okay? Because the market made an all-time high, okay? Let's talk about markets that did it. Japan, okay, has been below the high for 40 years, okay? You're complaining about the Fed? I mean, come on, dude. I mean, the Fed was
Thing about
slow. No, but you're saying the Fed missed it and whatever. They didn't miss it. They were just slow, and and
I'm
they have to
saying
act
they
slow.
almost don't care what they say.
Okay, well, let's say he's right now, and let's say there's supply disruption and there is massive debt, and they have to fund the debt, and inflation is upticking. What do you want the guy to do? You're him now. What should he do? Lower rates right now or raise rates? What's he supposed to do?
You can't lower rates if we're gonna. He doesn't know what I heard
Okay,
him say.
that's the end of this conversation. You just said it. He doesn't know, and we don't know. So he has to err on the side of caution because he's running a massive ship. This isn't like our trading account where we can maneuver, like a speedboat. This is a
True.
Federal Reserve. This is a Federal Reserve that basically has to run very cautious. So listen, was he late? 100% he was late. Okay. 100% the guy was late. Um, but he had to be late. But, it's funny you say that. He was late in like
He has
20.
to be late. He didn't have to be late.
Yes, he
He
does have
kept
to.
rates low
Dude, he had
for
to
no
be
reason.
late. Listen, we made an all-time high. Okay, a year and a half later. I know that's a lot of time in your life, but I guess what he did ended up working out because we made all-time highs, multiple times over the last 3 years. So, anyway, I don't want to discuss that anymore. I'm trying to get to these markets. We're running deep into this podcast, so we covered the bond market. We covered the equity markets. The currency markets again are kind of weird. The euro is acting like it wants to go back up. It's only three figures or 3 points off the high of the move with an S&P up 26%. That's leading me to believe that the dollar is going to face weakness on any correction here. So if we have any type of pullback, dollar is going to get weaker against the British pound. And the funny thing is, you were looking at that British pound trade and that thing didn't even work. Even with a 20% up move, we're right, pressing up near the highs of both the yen, the euro, and the British. So, the yen got down to 139, it's 145. The euro got up to 115 and change, it's 112. The British pound got up to like 135 and now it's 133. So all these things look poised to probably uptick. So that's sort of how we're playing it. We have a long euro position. We may put a position on in yen today. We're going to look at that for our OFX product or our currency wizard product. So you may see as a subscriber a trade in there today. We have a product that trades zero
It's
DTE,
a good
so that
product. The currency wizard. I
zero
love that. It's a good
zero
product.
data option expiration. We have a product, and we're going to give a trade today in that for our subscribers for that product.
Are you already long the euro or no?
I am, yeah, I said I'm long the euro. I'm long the euro. Um,
Are you
location
looking to add anything in anything else on top?
in what? In currencies? No, that's my only
Yeah.
currency. Um, interesting one I want to touch on that looks very interesting is the crude oil market. It
Yeah.
touched the highs of the move. They must have given Trump free oil to take back on his plane because oil
No,
is
it was
down a couple of
it
bucks.
was the initially it was like news on the Iran deal that they're okay with not making nuclear weapons and crude oil dropped overnight. But then later on, the IEA came out and said that demand for crude oil is going to slow down for the rest of the year. And I was trading that actually last night, and just take a look at this chart. The IEA basically said there's going to be a lack of demand. I just want to point out that the crude oil market already knew that going in as soon as, and it hasn't really corrected itself. Look at the curve, extremely backwardated before tariffs, which means that there's more of a demand than supply available kind of situation. When you have a crude curve that looks inverted, and look at it after tariffs, it was actually even more pronounced in the back end. And where it starts to go into contango, which is an upward slope, is right around the seasonally weak period around October, September. And we know what happens in October and September. So I think some of this stuff was definitely already priced into the market. And I think WTI at 63, that was a lot of the CTAs jumping in, just like I think a lot of the CTAs have been killing gold to the downside. One negative headline, all that starts to flip. And we're already seeing that with crude.
No, all right. I mean, I don't really. I still think it's in no man's land. Not ready to break out, obviously, and not ready to break down. So maybe $60 is like fair for now. I don't see a huge trade, but you could trade it every day and scalp it. It's moving a
I
couple
think
of bucks.
$60. I think that was the exact number that I was looking at as a fair value in the short term. It's interesting you mentioned 60. That's exactly what I was thinking.
I mean, I'm
Um,
leery. I'm always leery in crude because Trump wants it lower, and he actually looks at it. So you got to be careful on that. Um,
I'm going to keep
so
some of the short for a while. I mean, I covered a little bit of it, but I'm going to keep most of it. I'm thinking, we get the 50 handle, 50s, upper 50s.
maybe I don't know. It doesn't look like it wants to go down that much. So hopefully you get 60. Let's touch on gold. I have a long position in gold through
Oh,
options.
we're on the same side of the trade.
I
Should I
know,
scale in?
we haven't been right, so whatever.
I
I
think we're
haven't been
about.
right,
I
so
think we're about to be right.
I don't know. I mean, it's got work to do. The funny thing is, I'm mad at myself because I wanted 31.75. It got down to 31 and a quarter last night, and
I know.
the thing is moving like 100 points a day, which is a great trader. People should definitely be trading gold at this point for the movement in it on a day over day
The
basis.
moves happen overnight. What I've noticed for the last couple of months, the big moves actually, for the most part, they happen during the Asian European session.
Well, because there's very little liquidity and they can push around the market, and these CTAs have so much capital, relative to the market in gold that they can move this market. But, you know, I'm happy that gold is back to 3,200. We're long at 3,220 is the price that we bought it with options. It's not good that it's taken 3 or 4 days and went down, so our options are decaying, but we're not down a lot on the position, and we think it's going to work. I know you like to trade futures. To me, futures are very, very risky. Very risky. Yeah, I mean, you got to have tight stops. You got to trade low size, okay? Because the thing's moving
Exactly.
massive. Just and that's something. We're getting late here, and I want to wrap. But that's something that we're going to teach people on this podcast is basically how to risk manage size, how to really put together the right amount to risk on each trade and the right amount of margin or leverage to use to get your account and build your account up. So you'll get to see that here. That'll come maybe next week or when we get to it. But that's an important part of what we do. So we've touched on all of the macro markets. I want to just talk about Bitcoin for a second. It's kind of stuck. It actually acted poorly yesterday with an up market. I think that, again, we're shorted. This is a level that I think it could come off from, but I don't really want to get too much into Bitcoin. I want to get close to wrapping. This is our first week. I want to thank everybody that is joining us. Thanks for putting your trust in us. I hope that what we're giving you guys will get you ready for the trading day ahead. And we'll be doing this every day, Monday through Thursday, and then Friday I come on solo. And you could send questions in. I'll throw it to you. Also, what I want to say is we haven't covered this week because I'm more of a macro guy, but I know a lot of people trade equities. So we're going to pick handfuls of equities that we cover in our trading services to go over on this podcast as well. But we haven't hit it that much this week. Certainly during earnings season, we're going to cover all of the big stocks on earnings. So you'll get that as well. But I'm done. I'm wrapped. I'm going to send it to you to end the week on your words of wisdom and maybe give one thing that you're looking at that people can make money on.
Sure. So one thing that I'm looking at the 5908 level on the ES futures. That's your point of control on the volume side over the last 24 hours of trading. That also happens to be yesterday's closing level on the ES. I think that's a big pivot point. We've been glued to that level for countless hours yesterday. The market kind of gave way a little bit today. And I think that's going to be an important pivot point. If the market kind of trades under that tepidly, you could start looking for some shorts. The market may want to come off a little bit. Next level down that I see is right around 58.20 as a level the market is going to want to hold. So 5908, big pivot point. As long as it can't trade above that, I think we're heading right down to 58.20.
All right. I'd be interested just on a closing of this. What is the RSI? What are these index? I mean, they've got to be pinned up to the highs. I mean, this has been an incredible move. So I would keep an eye on that. I think we're overbought. Again, you're not going to see selling until we go, lower than this. People are hanging on and want to buy. So the whole mantra of the market in 3 weeks has changed. Trade carefully today. I think off the opening, if the market rallies a little, you could sell an out of the money upside call spread. But we're getting very close to the opening. We only have about 8 minutes to go. So I want everyone to get ready for the opening. Again, I appreciate everyone for joining us and putting their trust in us. And I wish everybody a great weekend. Peace.